how to manage positions, leveraging the risk ranges. So there's actually kind of two questions here, or two parts. One is from Heralder. I may have butchered that, buddy. Sorry, man. But again, just kind of, just sort of, how do you kind of think about adding to or subtracting, within the risk range? And then the other question was actually from the macro show. So if you go to slide 8, from Jim, it's fairly new to Hedgeye Nation, learning how to use the risk range with golden bullish trend at the top of the range at 2008. When do you sell some? So this is where, the simplest answer is you sell at the top of the range and you buy at the lower end of the range when in a bullish trend. So let's just kind of stick with that for right now. The risk range certainly helps from probability of, increasing the probability of success. Specifically, it helps with timing. Like when and where are two of the biggest questions to answer in the risk range. And then the signal really absolutely helps drive that, right? So the when is kind of, again, gold in this example might be at the low end of the risk range, then you'd be adding some there, right? But then the where is the signal itself and the fact that it's bullish trend. So in terms of specific execution, I think that's really, a key thing to be cognizant about and to be really focused on, right? Like sometimes, you don't really need to overcomplicate it. I think Jim, in your example, you talked about DSI and DeMark 9 counts and stuff like that. And again, I mean, hey, that's part of your process and that's something that you've built into it. Wonderful, kudos. It's not something that I necessarily look at, and I know Keith, doesn't look at that either. But again, it's all about what helps you influence your execution. And I think, from my perspective, and certainly here at Hedgeye, the VASP is really the key in terms of where to go and then when to go, right? So when to add, when to subtract. So again, if we kind of review this in regards to the trend signal, the where to execute, bullish equals add it, buy, get long. A neutral is a wait and watch signal, and then bearish is a stay away or sell or a short, right? So again, this is where, those three components, it helps guide you as to where to go. If you can't short, that's totally cool, but that you just understand that a bearish trend means stay away, right? So if you owned it, sell it, and then stay away from it. If you can short, then you can incorporate that into your own process as well. And then from a bullish standpoint, again, just if it's not in the portfolio, you can add it to it, or get long it, right? So again, a perfect example right now would be bullish gold and bullish dollar. But and then in terms of selling some, whether it's at the top end of the risk range, which is really what both of these questions were about, that's where it depends on the size of your position. So it depends on how big you are. If you're at your mins, then you can't violate your rule in terms of going below that, because really once you add to your min, you really have one decision to make. Do I keep it in the portfolio or do I sell it all? But if you're bigger than your min, then you've got more flexibility. You can sell, and incrementally touch your position at 10, 20, 30, 40, 50 basis points at a time, depending on what you're referring, or like what piece of inventory you've got in there. So again, I think this is a key component, and one that is a little challenging to answer from our perspective, because it really does depend on your portfolio construction and what you have in the old portfolio. But we could use GDX as maybe a good example here, and it was it was moved from neutral it was neutral on Friday and moved to bullish on Monday of this past week. So this past week was, what was last Friday? That was the 17th, I believe. So the 17th, it was neutral. On March 20th of 2023, it turned bullish. So that's something that you should be kind of circling, writing down, flagging in your notebook. And it was added back to ETF Pro on Tuesday, as well as added at a minimum position side inside of the Macro Pro re-rank product as well. So, it was bullish. If you acted on that, okay, good. But if you didn't, then Keith certainly gave you that signal on Tuesday of this week, on earlier this week, and it has moved towards the top end of the risk range. However, Keith has not sold any, because he's at a min size, and the only decision there, as I mentioned, is either to get out completely or to add it. So he's letting GDX kind of quote ride the bullish trend for now, and then we'll make a decision here as things progress. But if you're bigger than a minimum position size, then selling some is certainly the move. And remember, it is an equity and has the highest volatility of any gold exposure. So GDX would have the highest, volatility or in that component from any gold exposure. And if equity volatility, the VIX moves back to the top of the risk range, which this morning is 28.43, that has the potential of getting negatively impacted as well. So again, all these things you do kind of have to, keep in mind, you should be considering, et cetera, et cetera. But that'd be a good kind of takeaway here. So hopefully that was helpful in terms of how to manage a position inside of the risk range.